Hey, what's up, everybody? We're here in the Profit Center right here in Red Bank, New Jersey, and this is where it all happened. This is Ground Zero. Chris Crone, Epic, Rob Gill, Sean Callaghy, merging ecosystems, and you don't stop. Take that, rewind it back, DM me, PM me, link in bio, whatever you want to do. If you have some questions, I'd love to answer them. But in the meantime, I'm with my man Parker Russo, who runs all the social media up in here. Parker's become like a legend locally, and he's beginning to branch out into other places. So I like to not only coach Parker, but I like to have fun with him like he's a little brother. So Parker had recently asked me a question, if you want to ask all the good folks out there, or you want to let them know what you're asking. I think it's good because a lot of people are probably feeling the same way.
Yeah, absolutely.
That are your age.
So
no offense.
My question was, I was concerned. The stock market is so unsustainable. It's up and down. It's volatile. I don't know what's going on with it right now. So my question is, should I take all my money out, let it settle, figure out whatever's going to, whatever happens, and then put my money back in at a later date?
Oh, wait. So they're going to let you know when the market's going to go up?
Probably not.
Okay, so let me ask you, how old are you?
I'm 29.
Okay, so what year is it right now?
2022.
So when you were 19, it was what year?
2009.
Nope.
Sorry.
Nope. See, right there, folks.
2013.
2013. So during the last 9 years, have you ever, when you started making money, have you ever seen the stock market go down?
No, nothing like this.
Okay, folks, so this is a normal reaction for you folks that are in his age group, right? Here's what I could tell you. I'm not an economist. I don't predict markets going up or down. What I do, and this is all the team members at Epic, what we do teach and preach is understanding what your core value is when it comes to your money, right? How were you generationally taught about the scarcity and or the abundant mindset? Parker just demonstrated a scarcity mindset because the market external is going down. And by the way, he sees everything on TV. And when he's at the club with all his friends, for any of the friends that did invest, they're probably saying the same thing that he's saying, right? Is that fair?
It is fair.
So your circle is kind of giving you this information. And we call that behavioral investing, right? So let's just do a quick calculation. Let's go back to last year. And the Dow, easy numbers, was at 30,000. And let's say Parker had 10,000 in the market at that particular time. And all of a sudden, COVID hit. Within 4 or 6 weeks, it was down to, let's say, $7,000, right? The market made a serious pullback. Had Parker sold everything out at 7,000, I doubt that he would have put it back in a week later, which happened to be the bottom, and it started coming back up. But let's say he waited till last week, or 2 weeks, or even 3 weeks ago, when the Dow was above 34,000, and then put that money back in. For him to make up the difference of 7 and 10,000, which is 3,000, right? The market would have to go up another 10 or 15,000 points. In other words, it would have to go from 33 to 48,000 just to make up for him deciding that he wanted to time the market, because he is very normal in the sense, if you don't have a proper game plan, if you don't have a monthly strategy, if you don't have an idea what you want to do 5, 10, and 20 years later, behavioral investing will kick in and it'll make you very unstable in all of your decision making. And once we act out of or think and make action steps out of fear or scarcity, 9 times out of 10, it's not the right thing to do. So Parker, as you're going through this, how are you feeling right now, just like looking at the market? Do you look at your statements every day? Do you look online? What does it look like for you as you're looking at your money?
So honestly, I try not to look very often. I'll look 1 to 2 times a week. And, just so happens that the 1 or 2 times that I've been looking a week, it's like, oh my gosh, every single time I look at it, it's less and less money.
Yeah. So what Parker's suffering from, if you look in the month of April 2022, right? The S&P was down 8.8%. The NASDAQ was down 13.8%. And the Dow was down about 3.9%. Don't take my word for it. Go check it out. So 1 or 2 times a week, whenever he looked at it in the month of April, it was going to be down. Just like if you look at your statements every month, and at the end of the month, you see that your 401k is turning into a 201k, don't panic. Make sure you have proper balance. Make sure you have proper diversification. But at the end of the day, when it comes to proper planning, you want to make sure that there's a game plan that is meant to be, especially if you're in the wealth accumulation phase like Parker is, you want to be able to put money away on a monthly basis, right? So I watch all these folks on YouTube. I watch all these folks on Instagram and TikTok, and there's some really good messaging out there. A lot of peak performance coaches, a lot of in-your-face, just be brutally honest, let you be the content, as Bradley likes to say. Brad, I'm telling you, we're going to check you out one day, brother. You stop returning my phone calls, and we need to come correct about that. But at the end of the day, if in fact you are the content, and if in fact you're bringing it on a daily basis, what begins to happen is your message is pure, and people get insulted, right? So anyone out there, and I call these folks, let me go over to Parker right now. I call these folks, and I'm calling you out, the kryptonites. All you kryptonites, you remind me of people back in 2000 that were buying and selling internet stocks. How come you're not out there right now? I don't see nothing about kryptonites. All I see is blanket posts. I don't even see comments anymore, like a post about cryptocurrency. Yeah, we know it's here, and we know it's going to be part of the movement going forward. And guess what? Just like the internet world where, maybe 4 or 5, 6 different companies came out of that, the same thing's going to happen in the crypto space. But guess what? If you're in the business of selling crypto, if you're going to someone's island in the British Virgin Island to see someone speak for 3 days to trade crypto and to be able to get taxed on short-term capital gains because you're trading crypto, where are you right now? I haven't seen you. Where's everybody? What's going on? Where's the kryptonites, right? So here's my point. Like if Parker's going to invest his money in the market disciplined, and if he's going to do it strategically and on a monthly basis, it's no different with crypto and Bitcoin. If you do it on a monthly basis and you have a long-term view, and part of that view means never take it out, well, in that space and in that time, I'm pretty confident that you will have a level of success financially that your parents and grandparents never had. So Park, one thing I would recommend is get with your fiduciary, make sure that you are properly diversified at whatever your holdings are. Mm-hmm. And if you like your current holdings, make sure when the market goes down, you're really buying things on discounts. So like if you like cars, right? And a typical Mercedes might be $100,000, but now because it's down, you could pick up a Mercedes at $70,000. Why is that a bad thing? Right. It's no different with stocks and ETFs and mutual funds. If they're down and it sits and fits with your core values for a long-term plan, once again, I'm not a fiduciary and I'm not giving any recommendations here. The point is, if you average down on a monthly basis, and when that market goes back up, good things begin to happen. Let's go back to last year. Mm-hmm. If you had 10,000 in the market, COVID hits and it went down to 7,000. Imagine if part of that monthly contribution was at 7,000, and then when the Dow went from 18 to 22 to 25,000, then there was another contribution. By the time you got back to 30, your 10 would be worth about 13 or 14,000. Right? Mm-hmm. So it really comes down to understanding what is your diversified model. Now, if you talk to Ray Dalio, he's going to say there's 15 different asset classes. If you have 10 stocks and all of them are U.S. stocks and like they're all large cap or small cap or mid cap, well, you need to create other kind of protections in that overall portfolio. We call that the Financial Mosaic. And being able to do that will give you better opportunities to be able to, they call it dollar cost averaging. Now, the story doesn't end there with me. Because, we talk about compounding interest, which is what we just talked about, but you also compound taxes in that scenario. So you have to understand the magic of leverage. The magic of leverage. The magic of leverage. And buy other assets outside of that portfolio with that leverage. Once you get to that place, and go ahead and link in bio, subscribe below. What else do I say here? I don't even know where this is going. PM and DM me. One of the team members here at Epic will take you through that success process. And listen, if you're agitated and you're hating, take a couple deep breaths. I just had a fight with somebody. They were talking about how fat I was. I was like, don't let your girl around me. Don't let her around me because you're going to be upset. So here's the thing. Private message me if you want to sit down, have one of these team members take you through the success process, because I guarantee one thing. When you get off the call with one of us here at Epic, you will be more educated than you were than before you got on the call. Any parting thoughts, brother?
No, that was super insightful, and I'm going to keep my money in there where it is because I'm going to leave it in there for the long term and not look at the short-term gains or losses in that matter.
And leverage it when you can. Take that and rewind it back and always be compounding.